So guys, I got a bunch of charts to show you guys. This is the fundamental analysis of NIO, revenue, losses, everything over the past 8-9 quarters, what's going on. So first chart I want to show you is cash billions in US dollars. Well, cash on hand has been going down until Q2 of 2023, and then Q3, Q4 we had the CYVN cash injection. So that's really helped us get our cash position up, all right? And we're sitting at $6.3 billion of cash on hand. There's still quite a lot of cash on hand. So don't worry too much about that. But what's more interesting is the change of cash on hand, the rate of cash burn, all right? So as you can tell, look at this. Q2 of 2022, you had 0.3. So 300 million, 900 million, 600 million, 1.1 billion decrease in cash, 1.2 billion decrease in cash. And then you got 2 quarters where you added 1.9 and 1.9 billion respectively, adding cash. This was the CYVN cash injection. And then 1.8 billion Q1, decrease of 1.8 billion in cash. This is quite substantial, but this has a lot to do with the factory, purchasing the factory from JAC. So the factory is now in NIO's name, and that of course requires cash, but that becomes an asset, so it's not exactly a loss. So yeah, that's why we had this cash decrease. But don't expect this amount of cash decrease going forward. We're probably going to look at maybe negative 1.2 billion or to negative 1.5 billion in the next couple of quarters. Okay, so NIO still has plenty of cash. Going forward, total revenue. This is pretty interesting. So total revenue, looking at the trend, I mean, like, it increased. 2022 had a good, nice uptrend, and then 2023 came along. You got that product shift, all right, where NIO was transitioning from Gen 1 product to Gen 2 products, and this was that shift right there, all right, and it really took a big hit in Q2. And then afterwards, Q3, we had the successful launch of the ES6, all right, and also ET5T, ES8, EC7, all those vehicles were launched, and then you had a massive increase in total revenue. Nice. And then slowly a decrease, and this was before incentives kicked in. So of course in Q2 we can expect much higher revenue. We're probably going to get record revenues for Q2 of 2024 because we are at record deliveries. Okay, so this is something to look forward to, revenue going down, but more importantly, vehicle margins. If vehicle margins are low, it doesn't matter how many cars you sell, you're going to be losing money. So you can tell NIO had very good vehicle margins in 2022, right? 18%, 16%, very healthy margins. All right, and this was all Gen 1 product. And then in Q4 of 2022, that's when the ET5 was launched. And the started deliveries, ET5, and also ES7. These vehicles had slightly lower margin, and the cost of the ORNX chips were quite high. So that's why you're seeing lower margins in general. And then of course you had the ES6 being launched. So Q3 and Q4 of last year were actually okay, 11%, definitely not as high as 15%. And then Q1 2024 we had 9.2%. Yeah, we want this number to be at least 15%, hopefully 20%. Like, if you want to be profitable, we need this number at 20% at least. Okay, so they got to boost vehicle margins, and that's going to be boosted by Onvo, okay, and also NT 3.0 products going forward with a lot of their self-developed stuff. Speaking of self-developed stuff, the net loss. Yeah, this is kind of painful to look at. I mean, every quarter before they were only losing like 281 million per quarter, but then losses just kept on growing. I mean, like, massive net losses. All right, 838 million per quarter. And just we haven't gotten a quarter where we had less than 500 million in losses. All right, just look at the number of losses. Yeah, high loss, but the reason for that has always been investment into R&D, or spending into R&D, or investment into R&D. You can see the investment into R&D really went up. That correlates with the big net loss. Q4 2022, we had 577 million invested into R&D, and of course that equated to a massive $838.9 million loss. So R&D plays a big part of where the net losses go. So Q4 2022, that's when NIO was doing a lot of work into NT 2.0 products, the new ES6s and all that stuff. But Q4 2023, this is where NIO did a lot of work for the ET9 and NT 3.0 products, also Onvo. So they spend a lot of money because they're also building two brands, right? Onvo and Firefly. So you can expect R&D expenses to be high. But going forward, hopefully they can keep this in check, all right? Not get too exuberant with R&D expenses. Hopefully, keep it at around 400 million and not too high, like 500, 600 million. Yeah. SG&A, this is kind of interesting, okay? So SG&A, you can tell that in Q3, Q4, increase in SG&A. And then in 2023, also massive increase in SG&A. And then they fired a bunch of people in Q4 of 2023, November, and that dropped it down slightly. And clearly, what happened was, as the sales were increasing in Q3 of 2023, they really expected sales to increase in Q4 of 2023, but sales did not. However, you still had that high personnel expense. So NIO did the smart move of doing job cuts to lower this down, okay? So in essence, they are doing something pretty smart. Now, what's going on with this high SG&A expenses? They're doing a lot of marketing activities, sales events, and promos as well. And also, occasionally, they have very big bonuses for sales reps. For example, in Q3, Q4, Q3, they had massive bonuses for sales reps. It was absolutely crazy. Q4 as well. So that's quite incredible. But going forward, okay, man, going forward, we really need vehicle margin to go back up. And then total revenue, I think, is going to be very interesting because Q2 is going to be much higher. And then Q3, all right, Q3 of 2024, I think with the Onvo brand also delivering vehicles, that's also going to help it maintain at the high 2 to 3 billion level range. So that's going to be very nice. So that's your wrap up. You can think about what you make of it. Vehicle margins, I think, is something to keep an eye out on. As always, stay safe, stay healthy. Peace out.